9 exits and is here with me now. David, nice to meet you, and thanks for coming on to Fund Shack. Now tell me, why minorities? Why has that been the golden thread through your career?
Yeah, thanks for inviting me along, Ross. Why minorities? Well, I started back in 1997. Minority investing for me has always been around working with entrepreneurs. And private equity has been really successful over the last 30 years in terms of, building some great businesses, but it always has one common theme, and that is a business is for sale and a business is bought and sold. And minority investing is about bringing all the potential kind of benefits that private equity can bring, but actually it doesn't involve the business being sold. It's very much a kind of collaboration with the entrepreneur, a partnership, pardon the pun. And it's something I've always been really passionate about. And actually, I remember seeing some statistics across Europe. If you take certain kind of parameters around companies that are growing, say at more than 10% a year, and margins of say 20%, actually private equity only touches about 25% of them. 75% of companies, for them, private equity is never relevant. And for me, minority investing is about becoming relevant to that 75%.
Yes, there's this massive addressable universe.
It is, yeah.
And yet I would imagine, I don't know the stats out there, but in terms of the actual capital that's been raised to prosecute minority opportunities, it's probably tiny compared to the buyout industry.
I'd imagine it's probably less than 5%. But if you look at, you mentioned the 24 investments that made since we kicked off private partnership capital at Inflexion back in 2015, over 70% of them were the first institutional investor in those companies. And those companies aren't small companies. The average size is about £350 million. They've been around for 20 years. So for me, that's kind of part of the success.
So a lot of family-owned businesses, presumably.
It can be just businesses that, for one reason or another, private equity has not been relevant to them. Because more often than not, for me, it's being relevant to companies that aren't for sale. And the fact that, we're able to hit that kind of percentage and be that first investor proves the point that minority investing is something that can work for that 75%.
It's still pretty unusual though, isn't it? And so there must be the problem of like categorization. Like you turn up and you say, "Hi, I'm David, I'm with a private equity fund." Immediately there's a whole load of connotations that come with that then you have to strip down and explain what it is you actually do.
Yeah, there is that. I mean, particularly when we started the first fund in 2015, there was a lot of skepticism. This is just, private equity. You're going to have kind of fine print.
Exactly.
You're going to be able to fire me at some point, or you're going to be able to force to sell a business. And it doesn't matter how many times you say, no, this is genuinely a minority fund. This is about getting our investors their money into companies that they wouldn't normally reach through traditional private equity. And what comes with that is being a true minority investor. And back in 2015, there's a lot of skepticism. It gets a lot easier as time goes on. I mean, for instance, now, we've got 24 points of reference. When we first kicked off in 2015, it always surprised me that when you get one of your transactions kind of commented on by the press. I remember we did one called Closer Still back in those days as a media business. It was described as a buyout. And I was so frustrated. Oh. It's like, do all this minority investing and described as a buyout. Because I think that's all was recognised.
It's synonymous with
But it's really interesting now. I don't think you noticed, but people always now refer to transactions as whether it was a minority or majority. And I'd like to think in some way we've kind of helped kind of move that along.
Well, I've got to admit, I had also the preconception that there would be some small print, particularly around exits. How do you manage that then? Because you're going to need one, given that presumably the minority partnership funds are still 10-year LPs, are they?
Yeah, I mean, one of the benefits of being a specialist fund is you can be true to the fund. So I wouldn't want to say that we're the only private equity funds that do minorities. I mean, most private equity funds will do the odd minority. It's part of their
kind of tactical though, isn't it?
Rather 12, 40. Yeah, that tends to be a response. They really like the company. Minority is the only thing on offer, so they go for it. But it's always a bit of compromise. They're either slightly bending the kind of mandate they had from their investors when they raised the fund. They're kind of saying, well, yeah, it doesn't quite fit what we said we're going to do, but, or they're slightly bending the rules to the entrepreneur. And you often hear some horror stories that 11 o'clock at night on the day of completion, suddenly some new legal terms come in. And coming back to your point earlier about kind of breaking down perceptions of private equity, that is one of the big ones, actually. But if you go and you raise a fund on the basis of, look, and I think we were somewhat lucky in 2015. There was a little bit across, I think, all of private equity, this idea that we're looking for something a bit different. Lots of private equity buying and selling from each other. So something that kind of addressed that kind of new, being a new investor into a company for the first time was something that was interesting. I think also Inflexion had a fantastic LP base and track record. And obviously I'd been doing it at 3i as well. So it was I think we got our timing right. But saying to investors, look, this is different. We are going to put your money into really exciting businesses that aren't for sale. We're going to be relevant to that 75% for one a better term. But then going to entrepreneurs and say, this is all we do. We've raised this fund not to do the odd one. This is all we're going to do.
But back to my question about exits.
So to be a true minority fund, I think the thing you cannot be prescriptive about, because I'm sure one of your next questions will be, can you remove the entrepreneur, right? And the simple fact is no. And you can't as well dictate that you're going to sell the business. And I think that's when it starts slightly grating against traditional private equity. 4 out of 5 times, several years down the line, because it tends to be much more patient capital as well, you might exit together. And there's lots of examples of the 9 exits we've done where, I'd say the majority of them we exit together, but that's because the entrepreneurs decided it's the right time. There is occasions where we exit because the entrepreneur wants to go on further. Sometimes we stay with it. We've got some investments still in from Fund 1 where we've continued to stay with. But sometimes it's a natural point where it's time to get a new shareholder base. And sometimes as well, there's other shareholders that are looking to do something. And then all you need to do is make sure you can part as friends. So for me, it's about making sure that you get fair value for your shares, and you part well. And you could argue, well, do you get the maximum value? No. If you were doing a full-on auction process and you're selling the business, you probably don't. But I think as long as, that 1 out of 5 times you get fair value and it's the appropriate return for what you've taken, then that's fine. And those individuals as well become your great references going forward as well. So on exit, I think the key thing is we probably see, because we're seen as the European market leader, we probably see over 100 opportunities, serious opportunities a year, and we'll choose 3 or 4. And for me, a big decision around choice is, can we get on with the individuals? Do we understand what they're trying to drive towards? An exit is one of those. What are they doing it for? And sometimes, some great businesses we walk away from. So because we're not comfortable that we're completely aligned, it's all about alignment. So coming back to your exit point, do we need to have exit rights and such? No. We need to make sure that if we have at some point in the future kind of where someone wants to move on and someone doesn't, that you can part as friends, and you need to make sure you've got that kind of bottom down. But that's how, from a minority perspective, that's how it kind of works, which is very different to say what you get on a buy.
How would you describe the risk-return profile of this type of investment versus
That's a really good question. I personally think it's different. And I mean, you can look at it so many levels, like peeling an onion, and you don't want me to spend all that time doing that. But I'd keep it as a kind of really simple level. And that is, if you're an entrepreneur and you've got your business and you think that there's rocky roads ahead or there's some problems coming or whatever, you might sell your business and you might not sell it. But what you don't do is go for a minority deal. We might go through, similar process. You have to do diligence, etc. Why go all through that when, to sell a fraction of your business or a proportion, or in some cases, it's not them that's selling, it's other shareholders. Why do all that? Yeah. So I think, I've always said this, I think that therefore I only have to worry about what the entrepreneur doesn't know rather than he does know.
Yeah.
And we all work with people throughout our whole lives where you kind of say, I would never want to bet against you. If you're going that way, I don't want to go the other way.
Yeah.
And I kind of see that with investing as well. You know, you want to be aligned with some of these amazing people. I mean, that's what I've been doing it now for 27 years. And the key thing is the kind of people you work with. And entrepreneurs are incredible individuals. But it's a lot easier to be with them and aligned with them and backing them than it is to second guess them in my view.
Yeah.
So from a risk reward point of view, I think if you get that alignment right, then already you're starting from a position of much better than, say, buying a business off them.
So obviously qualitative factors are hugely important. So I apologize for keep bringing it back to quantitative factors, but what are the kind of the entry multiples like in comparison to buyouts, let's say?
It's similar. In fact, if you compare the two, both the buyout business and the partnership capital business, and the multiples, I think last time I looked, I think the average multiple for the partnership capital was slightly higher.
Really?
Because a lot of it's to do with the type of business you invest in. So I tend to find that partnership capital is more relevant to people businesses, to tech businesses that are on a very steep growth trajectory, because there's a reason why they don't want to sell the business. There's so much more to go for.
Yeah.
So
it's a bit more like the venture capital model, I suppose, when you're backing companies through milestones.
It is. I would say that, again, pardon the pun, inflection points. Yeah. But I mean, the venture capital, I mean, I have a lot of respect for the venture capital world. I mean, they have to, as an investor, they have to decide whether something's going to work or not. My job is really about how can we help them scale the business. But the kind of the model is already proven. We've got amazing resources, our overseas officers, our tech teams, our commercial teams, where we can really kind of help accelerate the growth of the business. But someone has already proven it. And also the size of the businesses are different. Yeah. So I might be investing in a data business like Global Data Healthcare that we did 6 months ago. That's still a big business. I mean,
So how big is your current fund?
So the current fund that we've raised back in January is 1.75 billion. And obviously we have also co-invest funds that we can also draw upon. So Global Data, a good example, was a 470 million investment.
Right. Yeah.
But we can do investments as you know, as much as 50 million. For me, it's not so much the check, it's the story. And
we probably should have done this at the start, but can you explain how your kind of minority partnership capital fund fits into the wider Inflexion story and the relative size and so on?
Yeah. So Inflexion Private Equity has been going for 25 years. It was set up by John and Simon, John Hartz and Simon Turner. And fundamentally for them, it's all about industrializing private equity, scaling it. But the premise across the three funds, and we have three funds, we have the buyout fund, which is your traditional private equity fund. We have the partnership capital fund, which is the business I lead. And then we have below that the enterprise fund, which does both minority and majority, but smaller checks. And the reason why that fund's there is that we didn't want to follow, as we've grown, we didn't want to follow kind of necessarily the path of other private equity where you kind of leave people behind. We wanted to capture, all that network, all that expertise on smaller transactions. So that's why the enterprise fund was formed. So in total, if you look at the three kind of strategies, we manage 12 billion euros of capital. But the one thing that is common to all of them is, what we want to do is deploy capital into the most exciting businesses. And whether that's a minority or majority transaction, we want to make ourselves as relevant to those businesses as possible.
So is there a single investment committee at Inflexion that covers
That covers all three funds, yeah.
And is there much, what's the word, not economies of scale, but synergies between these different strategies, or is it just interesting for you to be able to cover the waterfront?
I think the synergy in that you can be a one-stop shop. So whether it's an advisor or a management team, there's always, because you could argue we're a solution provider in lots of ways. So we'll get a phone call. We can cover transactions right at the lower end, right the way through to the upper end. In some cases, it's a business for sale. In some cases, it's business not for sale. We like to create a community amongst all the businesses we invest in. So it doesn't matter what country they come from. I mean, we've got investing offices in the Benelux, Scandinavia. Recently, we've opened an office in Frankfurt. Obviously, got the UK offices as well in Manchester and London. So it doesn't matter what also sectors are in. We host a lot of events. That diversity, we do try and bring it all together. Because more often than not, you can often learn as much from talking to other people, going through the similar experiences as you can from, say, bringing in consultants. So there's quite a lot of synergy in that respect. We also, coming back to the kind of adding more than just money, we have quite extensive resources around helping people with their talent management, with their technology. We've got overseas offices in China, in India, in the US, in Brazil, helping our portfolio kind of expand into new markets, because that can be quite daunting as well. But if you've got people on the ground that have done it many times, it just helps to kind of take away a lot of the problems and, take away reinventing the wheel more often than not. We've got commercial teams looking at how businesses kind of retain customers, become more relevant to the customers, how they price towards customers, becoming more dynamic in that. So all of these things that we've learned over the years are important to all different types of businesses at different stages of their growth, and it's relevant to whatever country you're in as well. But it's all about adding more value than just capital. And as I said, for me, partnership capital is the most important thing, because my biggest competitor is do nothing. So unless you can demonstrate that by having us on board, you can make more than it would have been if you were on your own, then it's very difficult to be relevant to that 75%.
Obviously, you don't want to encourage people to set up minority funds, but that's strange, isn't it, that your biggest competitor is to do nothing?
It is. The number of times you can work on a transaction, and at the last minute, the entrepreneur says, "You know what? I've had second thoughts," and you just have to bite it, because more often than not, they'll come back a year later.
Yeah.
You just need to give them time. It's quite patient. It's not like a buyout transaction where there's set dates. It is very much about being patient. It's all about trusted relationships. It's about over 65% of our transactions are completely come in bilaterally. Someone who's, I don't know, the friend has got one or two things that they need to resolve in their business. They're not ready yet to sell, but there's certain things that they need to do, and also in some cases they want to have that feeling they had when they first kicked off. They want to, I want to go into China. I want to demonstrate that this business can work well in the US. But it sounds a bit kind of. So what I might do is bring on board a partner. I might take some money off the table as well to sort out personal things that I need to do. But I want someone alongside me who's got real skin in the game, in my game, and who've got experience of expanding into the US and can help me do that. And those kind of transactions and those kind of opportunities only come from trusted relationships, really. And by having people on the ground in those offices, that's how you build that network.
So your biggest competitor is to do nothing, and yet the entry multiples, they're still kind of competitive vis-a-vis the buyout world. And does that, I guess, speak to just the quality of the entrepreneurs and the businesses that you're backing?
Yeah. You've got to be fair. You've got to demonstrate that you're valuing the business on a fair basis.
Yes.
Because you have to start the relationship on that basis. Because you're going to go through ups and downs and everything else, and you've got to start on the right footing.
What about in the boardroom, dealing with, well, there's challenges, but there's also opportunities. So let's look at the opportunities. So, for example, buy and build is quite a popular buyout strategy. Is that something that you look at with your minority investments too?
Yeah, I mean, funny enough, I saw the statistics on I couldn't even believe it myself, actually, but we, for Fund 1, so we made 11 investments in Fund 1 back in 2015, and we've made 150 acquisitions for those 11 investments. So it is. But then I'm not surprised in some respect, because part of the reason why we were invited by the entrepreneur to be part of their business is because that was one of the things that they wanted to accelerate. And yes, they had people within their business that perhaps got experience, but they wanted the capital, but also they wanted to boost that experience by having us on board. So, and I think if I could look back to those investments in Fund 1, of the 7 that we've exited, I think they grew those businesses in 4 years by over 170%, which is amazing. Now, don't get me wrong, those businesses were already grown very quickly before we invested, but nowhere near at that level. And some of that was for organic growth and M&A. But I would say a common theme was taking them into new markets. But the important thing I come back to, those could be great opportunities, but the entrepreneurs want to sell the business to achieve them.
Yeah.
And that's where we come in. And they want a partner, and they don't want to feel like they've got an employer. That's not how it is at all. It's a collaboration. I find it. I mean, I've had some amazing adventures with lots of entrepreneurs. You have to bite your tongue sometimes. You have to add value because that's how you earn their trust. The way you influence them is to be just as passionate about their business as they are. You can almost get away with saying whatever you like as long as you're thoughtful. You're saying it in the best interest of the company and you're passionate. So people will say...
That's a good discipline to have, isn't it?
Well, it is. People will say, well, how can you influence if you don't have all those? It's not about that at all. You write an investment agreement and you put it in a drawer. It's all about then building that relationship. And if you can add value, most entrepreneurs, very quickly, you become part of their inner circle. And you can influence. I mean, sometimes you have to kind of take the view, you're not going to win that battle. Probably the thing that's changed since we set up Partnership Capital back in 2015 and say it's gone amazingly well. It's not just about expanding it beyond the UK, because the first fund was very much a UK only fund, and recognising that the challenges that entrepreneurs have are relevant, doesn't matter what country you're in, it's the same. But it also moving on to corporates. So we've now done 5 corporate partnerships. So it's where in the past you've got a PLC. So we've actually done 2 corporate partnerships with Informa Group PLC and Global Data I mentioned earlier on. Where
so publishing and media.
And
data.
Informa, and data. And in the past, I think a lot of these PLCs would have sold subsidiaries and probably lived to regret it.
Yes, yeah.
You often hear CEO will say, people forget I needed to sell something. But then 4 years down the line, when it's sold for God knows how much, and normally private equity bought it.
It's embarrassing to them.
It's embarrassing, but people never remember the pressure we're under and the circumstances and everything else. And what we've been able to do, saying in Global Data's case, is they had 3 divisions in their data business. Healthcare was one that had a great opportunity of being independent. We invested and invested to take a minority stake and invested money into the company that Global Data has been able to use in the rest of the group. It got an immediate re-rating as well. I think that from memory serves, the overall business went up by 30% in terms of its value on the stock exchange. And I think that's one of the challenges all businesses have nowadays of whether they're getting the right scrutiny and valuation. And I think when you do a transaction like that where you stop putting value on a part of a business, it encourages people to relook at the whole business. And they still own 60% of Global Data Healthcare, so they're still able to consolidate it into their accounts. It's still part of the Global Data Group, but we're able to give Global Data Healthcare that kind of independence and that identity to drive the value and take it along. And for an entrepreneur like the CEO, Mike Danson, you could argue he kind of gets the best of both worlds if when it becomes an amazing success, he can easily turn around and say, look, I didn't sell the business. I did the right thing.
Surely there's a really big universe of potential businesses there, isn't there?
There is. I mean, I think the thing about minority investing, you mentioned before about, are you worried about competitors? And I know this sounds really strange, but it'd be actually good to have more competitors because the challenge is not market share, it's creating the market.
Yes.
It's giving choice. So it's giving choice to entrepreneurs that they don't have to sell their business in order to solve issues they may have. I mean, the statistics about entrepreneurs selling their business and the next business being a failure. I kind of see Partnership Capital when I kicked it off and been doing it sometimes. It's almost an opportunity for an entrepreneur to have involvement in the business for much longer because, they don't need to sell. They can realise some money, they can sort out some personal things, they can work on succession, but they can still be in charge of the business. Rather than selling it and then kind of going home and going, right, what am I going to do now? And I think that people underestimate that kind of emotional link between entrepreneurs and their business, where their self-esteem, where their ambition, kind of where their personal finishes and where the business starts often can be quite blurred. I think for me, in my experience, by taking on minority investor, you can resolve that on a longer period of time rather than just closing your eyes and putting the business up for sale. It's whether it's, for me, more competition, more people kind of out there saying there's more than just buying and selling. Whether it's corporate PLCs or whether it's with entrepreneurs, I think that's going to be great. I wouldn't like to think of that 75%. I mean, we're only still touching a fraction of it.
Yeah.
And I think you do need to be an independent fund. You do need to be focused on minorities. I think it's hard to do both. I think
from the same fund.
My view, and that was something that was really important to me when I went to Inflexion. I mean, nothing else from kind of building your expertise and only being only having a culture and a DNA around minority investing, but also being true to your own LPs and being true to entrepreneurs, and not when the entrepreneur says to you, right, I want some references, not sitting there and going, right, I'll give you that one. No, that one's not quite. Whereas I can say, look, there you go. There you go. Feel free to contact them.
Well, maybe we could close with this point then around your people and how you approach recruitment from a partnership capital perspective. So putting aside the wider Inflexion business and the buyouts, from what you've said, while to an outsider, they might say, well, what's really the difference between minorities and buyouts? From what you've said, they're actually, I think the differences might be subtle, but they're very important. And so what are the skill and personality traits or differences that you look for when recruiting your team in the minorities part of the business?
Well, it's interesting you say separating it from Inflexion, because actually, believe it or not, I think it's the things I'm looking for across the whole of Inflexion. So I would say, every private equity business is different. The people are different, but they all have different strategies. One of the things that attracted me about Inflexion was, we talked about earlier, about kind of that there's a much more balanced EQ. People like to kind of, there's that restless ambition. It's kind of like, why aren't we doing that? That constant entrepreneur kind of filter that comes through in the business.
Yeah, because you're not a bank spin out as many mid-market European firms are.
And I'm not saying necessarily, everybody has their own strategy and they recruit the people for that. But I would say with Inflexion, we work for us, the kind of personal relationships and that partnership culture is prevalent across the whole group. Regardless of whether we have a minority or majority, I think we like to be people that like to be liked. And we have a huge diversity of people. One of the things that sort of still surprises me, we have ex-doctors working for us that have decided they want to be investors rather than pursue, in the healthcare industry. We have architects. We have all sorts of range of people. One of the things that I often find with entrepreneurs is they don't want someone who's necessarily, they don't want someone who's got a big ego, because a lot of the time, they kind of make their mind up whether they want to work with you quite early on. And you can make mistakes. They forgive you for it because they're looking at the bigger picture. So for us, it's about, recruiting people that have got a bit of personality. We're a big family culture within the business as well. And for me, that kind of, it makes it a lot easier then. So I'd say culturally wise, to answer your question, I think partnership capital is all about being able to engage with people, not necessarily feeling that you've got to be right all the time. And being a collaborative. And it makes no difference, that kind of whole partnership, that entrepreneurial spirit. I think it makes no difference whether it's the minority side of the business or the buyout side of the business.
Well, it sounds like it's going very well. Long may it continue. And thanks very much for coming in and sharing your experiences.
Thanks, Ross.
You've been listening to the Fund Shack podcast. Wherever you're listening or watching, please click follow or subscribe. That's all I ask. Thanks for listening.